Finally, we're now on our second to the last module for this semester. We'll now talk about the effects of changes in Forex. So for this, we'll cover determining the functional currency, and then after that, accounting for the foreign currency transactions, and then how do you translate foreign operations. Assuming you're operating in a number one, non-hyperinflationary economy, and second, in a hyperinflationary economy. It's actually covered by past 29 instead of past 21, but we'll touch on that as well towards the end of this video. Okay, so for first, determining functional currency. So, paano mo pa malalaman yung functional currency? The functional currency of a company is the currency of the primary economic environment in which an entity operates. So, yung ginagamit niyang currency. So, paano mo malalaman yun? Ano yung indications? You have actually primary and then secondary factors. For the primary factors, number one, yung sales ba niya, yung mga benta niya, how is it denominated? Second, yung sales prices, ano yung currency that determines it? Then third, yung mga binibili niya, input cost or purchases niya, how is it, ano ba yung currency kapag bumibili siya? So kapag alam mo na, using the primary factors, okay ka na. Actually, the primary driver of that will be sales. Anong currency ba yung binibenta ng isang company? Usually, that's enough for you to determine ano yung functional currency. Pero what if yung currency niya madami, halo-halo, tapos yung sale prices hindi clear kung ano yung, or wala namang government or regulations that sets the sale prices. Tapos yung input cost niya, iba-ibang currency din. So, parang unclear ka dun sa primary factors. If unclear ka dun sa primary factors, you can look at the secondary factors. Kapag lang unclear ka pa dun sa primary factor. So, ano ba yon? Ano yung currency in which funds or receipts are retained from financing activities are generated and then from operating activities are retained. So, yung financing activities, ano ba yon? Usually, dalawa lang yun eh. Kapag nag-loan ka, anong currency ba yon? Kapag yung parent company mo or yung shareholders mo nag-inject ng capital sa'yo, anong currency yon? Or kapag unclear pa rin yun, operating activities are retained, meaning yung mga bank accounts mo, how is it denominated? Is it denominated in USD, PHP, yen? So dun mo, yun yung mga indications mo. Okay? So I hope dun pa lang sa primary mo, medyo alam mo na eh. So if unclear pa rin, you can look at the secondary factors. Dapat dun, alam mo na kung ano yung functional currency. Kasi, that will be important when you record your foreign currency transactions. Ano ba yung FCTs mo? FCTs are transactions denominated or to be settled, not or, and to be settled in foreign currency. And a foreign currency is a currency other than the functional currency. Kaya dapat alam mo yung functional currency mo. Kasi kapag nagkaroon ka ng transaction na hindi denominated sa functional currency mo, kailangan mong i-translate kasi ang tawag doon, foreign currency transaction. Okay? So, paano ba mag-translate ng foreign currency transaction? Sa initial recognition, you use the transaction rate or the spot rate at transaction date. The spot rate is, ito yung foreign exchange rate at a given point in time. So, when you say the transaction rate, this is the foreign exchange rate at the date of transaction. Okay. Subsequently, paano mo siya i-measure? Tingnan mo muna kung monetary or non-monetary items. Ano-ano ba yung monetary items? Monetary items are those items na isa-settled or ma-receive in fixed units of currency. For example, cash. Alam mo, meron kang 100 peso bill. Kahit anong gawin mo, pag balik rin mo yung 100 peso bill, still 100 peso bill yun. It's denominated in a fixed unit of currency. What if naman, nagbenta ka? So, meron kang receivable from a credit customer. So, yung receivable mo na yun, babayaran niya and to be settled niya or to be received mo in fixed unit of currency. That makes the receivable a monetary item. Pero what if it's inventory? Diba yung pag magbebenta ka naman ng inventory, hindi naman fixed unit of currency pa yon. Depende kapag nabenta mo na siya, saka lang siya magiging fixed unit of currency. Kunwari meron kang PPE or other fixed assets. So, yung PPE mo, usually, kung magkano mo lang nabili. Pero at any given point in time, pag binenta mo yun, hindi siya denominated in a fixed unit of currency. So that's how you distinguish a monetary versus non-monetary. Bakit siya importante na malaman natin? Kasi kapag monetary items, tas may FCT ka, you translate it using the closing rate. And the closing rate is the spot rate as of reporting date. Okay? So, closing rate siya. Any gain or loss from initial recognition, yung transaction rate mo versus the closing rate, that will be recognized in profit or loss as part of foreign exchange gain or loss. So, kapag non-monetary items naman, kung ano yung initial recognition mo as of date of transaction, yun na siya. You don't restate. You don't retranslate. Kaya importante malaman. Monetary or non-monetary. Let's look at it. First, in this problem, foreign currency transaction involving an importation. When you say importation, nag-purchase ka, tapos babayaran mo siya in a foreign currency unit or in a unit other than your functional currency. Kunwari, in this problem, your functional currency is the Philippine peso, okay? So, the problem, meron kang binili, tapos na-receive mo siya, tapos babayaran mo siya in different dates, on different dates. So, on November 1, nag-arrive yung goods. On December 31, 2020, exchange yung data. On December 31, 2020, ito yung exchange rate. And then, to be settled on January 31, 2021, the date of settlement. Paano mo siya i-record ngayon? So, you have 3 sets of journal entries on these dates. As of the date of arrival of goods, so, na-receive mo na yung inventories. So, kunin mo yung spot rate as of transaction date. Entry mo dyan, debit inventory, credit accounts payable, translated on transaction rate, which is 0.50. On second entry naman, on December 31, 2020, as of reporting date, i-remeasure mo siya at each reporting date based on the closing rate. Kasi monetary item eh. Ang monetary item mo dyan yung accounts payable. Kasi babayaran mo siya in fixed unit of currency. Pero yung inventory, hindi mo siya i-retranslate. Doon na siya talaga kasi non-monetary siya. Okay, so yung accounts payable, i-remeasure mo siya. Anong mangyayari? From dati 0.50 yung translation mo, magiging 0.54. Okay, so meron kang increase in payable kasi from 0.50, magiging 0.54 yung babayaran mo. So meron kang increase in accounts payable equivalent to the difference 0.54 minus 0.50 times your foreign currency unit of 2.5 million yen. So your accounts payable, dadagdagan mo siya ng 100,000. Tumaas yung payable mo, lugi ka ba doon or kumita? Lugi ka. So, meron kang forex loss debit of 100,000. And then, on the date of settlement, bumaba naman, na-reverse, no? Bumaba naman yung exchange rate mo, naging 0.52. So, yung baba niya, i-recognize mo lang yung balance ng accounts payable. That will be 1,250 plus 100,000 na remeasurement. That will be debit accounts payable 1,350. Credit cash. So, kung magkano yung settlement mo, which is 0.52 times the 2.5 million yen foreign currency unit, that will be 1.3 million pesos. And then credit forex gain for the difference. So, yung forex gain, may forex loss ka last year. For 2021, you have forex gain of 50,000. Di mo na makukuha yung forex loss mo last year. Kasi, nag-close na yung libro mo ng 2020. Okay. Kung yan ay nangyari within the same year, pwede mong ineto si forex loss saka forex gain. Pero kapag tumawid siya ng taon, hindi mo siya pwedeng inet. Okay? Next, problem 2, foreign currency transaction. What if exportation naman? Ikaw naman yung nagbenta palabas. So, baliktad lang yung effect. Kanina kasi ang nire-measure mo ay accounts payable. Ngayon naman, ang nire-measure mo ay, ang i-re-measure natin ay accounts receivable. Okay, Pinoy exports sold furniture to a foreign customer for 10,000 foreign currency unit. Pertinent exchange rates on November 10, 22, December 31, and January 5 the following year are given. Prepare journal entries. So, journal entry mo nung November 10, naka-receive ka ng order. Technically, wala ka pang transaction nun. So, that's no entry. On November 22, meron kang shipment. Na-ship mo siya. So, ang entry mo kapag may shipment ka, debit to receivable credit sales. Equivalent to the transaction rate, which is 56.2. On December 31, you have to remeasure your receivable. Yung sales, hindi na. Yung receivable, you have to remeasure it using the closing rate as of December 31, 2020, which is 56.50. So, from 56.20, tataas yung receivable mo, magiging 56.50. So, meron kang debit to receivable, credit forex gain for the difference. And then, on January 5, 2021, nung na-receive mo na yung bayad, naging 56.45 siya, bumaba naman from 56.50. So, meron kang 0.05 na baba na lugi. So, meron kang forex loss for that, 500. Tapos, credit mo yung accounts receivable mo na 562,000 debit plus additional debit na remeasurement na 3,000. That will be 565,000. Tapos, meron kang cash. Magkano yung actual cash na na-receive mo? That will be the closing rate as of settlement date, 56.45 times 10,000 foreign currency unit. That is 564,500. That's it. What if naman? Kanina kasi, pa isa-isang transaction lang siya. It's either may importation ka, bumili ka abroad, or meron kang exportation, nagbenta ka abroad. What if meron ka talagang isinet up na company or operations in a foreign country, denominated in a functional currency or in a currency other than your functional currency. So, you have to translate that. Ang tawag mo doon, foreign operations. So, tingnan mo muna kung yung foreign operations mo, yung kumpanya, yung subsidiary mo, usually that's a subsidiary. Yung subsidiary mo, kunwari, is it operating in a hyperinflationary or non-hyperinflationary? Kasi kapag hyperinflationary economy, which I will tackle later on, mamaya pa yan, dito na tayo sa non-hyper. Kapag hyperinflationary, closing rate daw or current rate method. Doon muna tayo sa non-hyperinflationary. Kapag non-hyperinflationary economy daw, assets and liabilities are translated closing rate. Income, expenses, and other comprehensive income are translated at transaction rate or the spot rate at dates of transaction. However, alam naman natin na kapag meron kang isang kumpanya, yung sales mo halos everyday meron. So, alam nga namang daily nagta-translate ka, no? If that is not possible, we are given an alternative by the standard na pwede ka daw gumamit ng average kung hindi naman ganon volatile yung exchange rates mo doon. So, pwedeng you can use monthly average or year-to-date average if hindi siya ganun ka galaw yung forex mo. For the income, expenses, and OCI. For the shareholders' equity for your common stock and APIC, you use historical rates or the exchange rate kung kailan na-issue yung shares of stocks. For retained earnings, you use the beginning translated retained earnings plus the net income or loss na alam natin na tinranslate natin ng either transaction rate or average rate minus the dividends which is translated at transaction rate. And then the difference dun sa mga translation mo sa taas will go to your CTA. This is what's unique with the foreign operation. You use the account CTA or the cumulative translation adjustment. Some call it translation reserve or cumulative translation reserve. Basta, kahit anong tawag mo sa kanya, it's actually a separate component of your equity. So, di ba, sa equity mo, meron kang common stock, APIC, pwedeng may treasury shares ka dyan, meron kang retained earnings. So, kapag meron kang foreign operations, meron kang additional line item, which is your cumulative translation adjustment or CTA. So, ito siya. It's a separate component of your equity, consolidated equity. Okay. Problem 3, non-hyperinflationary. try natin na translate natin tong FS from SGD to PHP daw. So, given yung balance sheet and income statement, given din yung rates, closing rate, historical rate, and then average rate. We all know kapag monetary assets and liabilities, we use the closing rate. Kapag non-monetary assets and liabilities, we use the historical rates. Kapag common stock historical, kapag retained earnings, that's beginning retained earnings plus net income less dividends, if any. Dito wala namang dividends, okay? And then, for the income statement, we use the average rate. Tingnan natin. Paano siya translate? So, for monetary assets and liabilities, we use 37 as the closing rate. For the non-monetary assets and common stock, we use 34 for the historical rate. Retained earnings, 1231 is, computed as, tingnan mo sa baba, nag-compute siya. Yung 198, 100, computed yun sa baba. Tingnan natin ha, yung sales mo, tin-translate niya, as well as your expenses, tin-translate niya using 35 as the average rate. Your net income is, kung magkano yung sales minus expenses na translated na. So, your retained earnings beginning, dapat given to kasi from last year to magkano yung RA ending mo from last year. So, if this is the first year of operations, 0 naman to. Pero meron siyang kiniven na 128, 100. Given yan dapat. So, your ending retained earnings is 198, 100. And then, your translation reserve is actually a balancing figure for your Philippine peso balance sheet. Okay, so yung 20 to 100, nakuha siya, inad ko lahat ng assets, tapos inad ko lahat ng liability and equity. Tapos any difference, meron ka pang natitirang debit na 20 to 100. Kaya siya negative kasi equity account reserve. So, normal balance and credit. Pero since debit siya dapat, so naka-negative siya, 20 to 100. Ganun lang siya. Next, what if naman it's a hyperinflationary economy? First, ano ba yung hyperinflationary economy? From the word itself, hyper yung inflation. Ganun lang siya. Okay, rapid, excessive, and out of control general price increases in an economy such that the cumulative inflation rate over 3 years, ito example lang to, approaches or exceeds 100%. So, just a background para for context lang, no, para ma-imagine natin ano ang itsura ng isang hyperinflationary economy. Sabi, masasabi daw na hyperinflation siya kapag yung inflation mo for the last 3 years is cumulatively 100%. For background, in the Philippines, our inflation rate for the past 3 to 4 years ranges from 2 to 5% lang. And we all know na yung 2 to 5% a year na inflation sa atin. Ang bigat na, di ba? We were actually, lalo na yung bagong ratings ni IMF sa Pilipinas, inflation, and as well as GDP and other macroeconomic factors natin. May downturn talaga tayo. And we all know, grabe yung epekto sa bawat mamamayan ng Pilipinas. So, kung yung 2 to 5% pa lang ang bigat na sa bulsa, how much more yung 100%? You can just imagine. So, may mga country ba talaga na ganon? According to IMF forecast released in October 2020, ito yung mga pino-forecast nila na hyperinflationary for the year ending 2020, no? Argentina, Iran, Lebanon, South Sudan, Syria, Venezuela, and Zimbabwe. So, if a company has subsidiaries in these countries, dapat i-restate niya using past 29 financial reporting in hyperinflationary economies. Yun siya. Okay. So, past 29, sabi nga, dapat i-restate mo siya. Paano mo siya i-restate? Using the general pricing power. So, usually you use the GPI or the General Price Index to measure the general level of prices of goods and services. So, GPI is a measurement of the level of prices. Kunwari lang to, ang GPI natin last year is 100. Tapos ang GPI mo this year is 120. It means na yung 100 pesos mo dati, yung isang good na nabibili mo dati na worth 100 pesos, this year, 120 na siya. So, a 20% increase is is a 20%, a 20% inflation rate is a 20% increase in the general level of pricing. So, parang ganun siya. Ngayon, kapag hyperinflationary daw, dapat kang mag-restate ng non-monetary items. Kapag monetary items, no need to restate kasi it's receivable or payable in fixed units of currency. So, no need to restate. Any gain or lot, lot, any gain or loss on net monetary position will be recognized to profit or loss. Pero kapag non-monetary, mag-restate ka. Paano ka mag-restate? Sample. Problem 4, hyperinflationary economy. So, restate below a financial statement of a hyperinflationary economy or a company or entity operating in a hyperinflationary economy as of December 31, 2020. Binigay niya yung GPI last year 100, GPI this year 130. Again, the GPI is representation kung magkano yung price mo this year versus yung price mo last year. Okay? Or level of prices. Okay. Given yung balance sheet and income statement, compute na. Na-compute na. So, sabi natin, kapag monetary, no need to restate. Pag non-monetary, you have to restate. Monetary, no need to restate. So, kunin mo lang din yon. Kapag non-monetary, restate natin based on GPI this year versus GPI kailan mo siya nabili. Sabi, nabili mo lang siya last year which is 2019. So, price ngayon over price kailan mo siya nabili. Ganun mag-translate. So, that's 130 over 100. That's 19.5. Monetary liabilities, no need to translate. Your common stock, price this year over kailan siya na-issue. Sabi ni problem 2019. So, that's 130 over 100. That's 15.6. Your retained earnings is actually your balancing figure. Pero, paano mo siya na-balance mo siya sa balance sheet, diba? So, dun sa income statement, tingnan mo naman, mag-backward, tawag doon? Mag-compute ka pabalik. So, meron kang sales and expenses. Kunin natin yung GPI. If this, sabi nung income statement mo, it is earned evenly throughout the year. Since earned evenly naman siya or incurred evenly yung expenses, kunin mo yung average GPI. So, kunwari, since walang given average GPI for the year, kunwari that's 130 over 100, that's 115. So, for your sales and expenses, translate it as 115 over 100. So, makukuha mo yung, pag binackward mo kasi yung computation, in-squeeze mo yung computation, your net income should be 2,900. So, kung 2,900 yung net income mo, any difference dun sa sales expenses versus the net income na squeeze natin, that will be your gain or loss on net monetary position presented within profit or loss. So, that's it. That's the end of our discussion. So, if you have questions, again, just let me know. Thank you.